I see this propensity for Bitcoiners in particular to call out price manipulation, to use the term or excuse for downward price movement, price manipulation. But I never, as oddly as it might seem, you never really hear that narrative when Bitcoin is pumping to the upside and in a strong, prolonged bull market. So this seems to be a one-sided narrative that is only brought out into the light once one is underwater or not experiencing the price behavior that they desire. But when they experience the price behavior that they desire, there is no mention of price manipulation. All right. So this is something that I want to address today. One follower made a joke recently, a joking or quasi-joking comment to me. Oliver, do you mention in every single post your 40 plus years of professional market experience? And I chuckled a bit and I responded by saying, actually, I want to, but sometimes I forget. So this is one of those times I'm not going to forget. Guys, just to lay the groundwork, I have been involved in professional markets for the last 40 plus years, so 4+ decades. I was a professional NASDAQ market maker starting in 1986. I did that for a number of years before branching off of Wall Street to start my own professional trading firm in 1994. From that point, I grew one of the fastest growing trading organizations in the United States back in the 1990s. I formed, founded, developed, and eventually sold the second largest direct access brokerage firm in the United States. I sold it to Schwab in the late 1990s. I went on to create an organization that has over 13,000 traders in over 92 different countries. The bottom line, I continue to be one of the most sought after speakers on the topic of trading markets for a living all around the world. Now, I tell you that not to brag or anything like that, and that is absolutely true. The reason I tell you that is to let you know right off the bat that I do have a strong foundation in the professional markets, and I understand what manipulation is versus regular market play. Now, I believe that many Bitcoiners are utilizing the topic of Bitcoin's price being manipulated far too much. I think they give far too much credit to this false narrative of market manipulation. And I believe that is not in being ingenuous. I think that the vast majority of these people are just not sophisticated as far as how markets operate. Now, Bitcoin, for most of its history, was outside of the traditional financial industry, which means that it totally operated outside of traditional markets. And because of that, it did not have additional layers on top of it for a very long time. And let me explain what that means. So when a market starts to become financialized in the traditional sense, you start to layer other derivatives on top of the spot market that gives larger money the opportunity to leverage against its spot market activities. You will never have big money come to any market unless there is the ability to hedge against it. These additional derivative products, such as options and futures and even ETFs and things of that nature, these are additional layers on top of the raw spot market. Without these additional layers, one does not truly have the ability to hedge. Now, the retail part of the industry may not have as great of an incentive to hedge their positions as, for instance, a pension fund might always want to hedge their positions. A mutual fund might want to, a sovereign wealth fund might want to leverage. And big money is never going to come to an asset unless they have options, viable, regulated options to hedge their spot Bitcoin operations. And so with the advent of the spot Bitcoin ETFs, and the advent of Bitcoin futures, I believe in late 2017, early 2018, then spot Bitcoin ETFs, which brought on, options. And of course, now you have other things that can be utilized for hedging, such as Bitcoin treasury companies and things of that nature. Because of that, we have now, Bitcoin has inserted itself on purpose by design into a system that it is virtually designed to crack open. And it is the ultimate Trojan horse in that manner. So it is not that the TradFi industry is co-opting Bitcoin. It is Bitcoin's way of putting the costume of TradFi on, posing as I'm a TradFi item as well, and inserting itself with the TradFi costume. And I think that this is something that's also misunderstood by a lot of people, that they look at this as the banks have co-opted Bitcoin, the big TradFi institutions such as BlackFi have co-opted Bitcoin. Listen, Bitcoin is not co-optable. Bitcoin is not controllable. If you see Bitcoin being involved in other areas of the TradFi space, that is actually Bitcoin putting on the costume of a TradFi and as a Trojan horse inserting itself into the system to blow it up from the inside. My point with this is to try to explain that regular market behavior with these derivative items such as options and Bitcoin futures contracts and the spot Bitcoin ETFs and so forth and so on, this is normal market behavior. That's not manipulation. So I think it comes down to, what do we consider market manipulation versus normal market behavior in a world where you have spot in addition to multiple layers of derivatives on top of the spot. My definition of manipulation is when someone does something that is not available to you and me. If someone is able to take an action, to take advantage of a strategy that is not ubiquitous, that is not available to you and me, that is off the cuff, that is actually illegal, that operates outside of the structure, that if caught would be a crime, that is manipulation. Manipulation to me is fraud. Manipulation to me is a crime. But what manipulation is not to me is utilizing an option to collar the Bitcoin price. I've been doing that with stocks my whole career, collaring price with options, capping my upside with a spot item, capping my upside in exchange for little to no risk. I've done that with options my whole career. That is not manipulation. To collar the item with options, to use futures to offset any potential downdraft in the spot item, that is not manipulation. That is fair market play that I can do, you can do, anyone else in the world can do. The only thing stopping them from doing it is lack of knowledge, lack of information, lack of education, or lack of sophistication. That to me is not manipulation. So let's make it clear. We have to define what manipulation is. And in my book, manipulation is doing something illegal. As an example, JP Morgan was fined, I don't know, close to $1 billion for manipulating the spot silver market. I believe this is in the mid-teens, 2010s, 2013, 2014. Some of you guys can look it up if you want to. JP Morgan, accused of fraud, pays fine for silver market manipulation. That was doing something illegal, doing something outside of the system. That's true manipulation. But when you utilize the tools that are available to you, the options, the futures contracts, the hedging with ETFs and things of that nature, and the derivatives on top of the ETFs, when you utilize the tools that are available to you, that's just normal market play. And it is something that Bitcoiners should not be afraid of. In fact, you want derivatives on top of Bitcoin. You want the futures contracts. You want the options plays. You want the delta neutral strategies applied to Bitcoin. You want the futures carry trade going on all the time. These are the activities that not only bring hundreds of billions, if not trillions of dollars to the network, it fosters the need to always own Bitcoin, to always own spot. And let me just tell you this, never in the history of financial markets has derivatives been added to a thing that has not caused it to go up. I'm going to repeat that 2 more times just so you get it. Never in the history of all financial markets has an item that has earned the status of getting derivatives applied on top of it, not gone up. One last time. I'll say it a different way this third time. Derivatives always add rocket fuel to the price to the upside, never long-term to the downside. So there's this notion amongst the novice, even the novice Bitcoin group, the novice X group, the novice group, that they don't understand how financial markets truly work. They equate derivatives equals bad, derivatives equal control, derivatives equal manipulation. This is nonsense. Derivatives equal rocket fuel. Plain and simple. You can't find one thing in the history of the world that derivatives have been added to that has not gone up forever after that. Forever. Now, why is this the case, people? Because whether you realize it or not, the institutional world, who's the largest utilizers of these derivatives, they are always net long in their bias. And for some reason, the novice sector believes that they're net short. That's stupid. The institutional world is always net long. So the derivatives that are available to them will be used by and large for longs, not for shorts. So if you think about it, a pension fund that's going to get into Bitcoin is not thinking about the short side. They're thinking about the long-term 20-year, 30-year potential of Bitcoin. They might hedge with derivatives on their long position, but the view by and large is long. A sovereign health fund is not thinking about a 4 or 5 or 6 month drop to the downside. They're thinking about where this thing is in 20 years from now. Everything from the institutional side is long bias, so the tools available to them, which are derivatives, will be utilized by and large on the long side. This is why derivatives are rocket fuel for any asset that earns the privilege of having derivatives added to them. If you were to go back to the early 2000s, when the talk started to explode about America the U.S. having its first gold spot ETF back in 2001, this is when it started. The talk about a spot Bitcoin ETF started in 2001. Now, for those of you who are in front of your computer, if you're in front of the gold chart, pull up the gold chart on TradingView or whatever. You can just type gold, put on I would say a monthly chart time frame, go all the way back to 2001. And then from 2001, I want you to go to 2004, which is when the spot gold ETF got approved, late 2004. I remember this like yesterday because I put a large portion of my wealth into that spot gold ETF in January of 2005. Now, if you were to look at gold's activity prior to 2001 and post 2001, you will see two different assets. It's like they're not even the freaking same. After 2001, 2004, you see a beeline straight to the upside right into 2012. You will see a form of activity that is unlike anything from its past, far more highly volatile before 2001, far more volatile, far more unreliable, far more wacky, big moves to the upside, crashes to the downside. But after 2001, after 2004, you don't see that. The market changed. It went into the world of derivatives, but it did not quell the price. It made the price more orderly. It turned it into a marching to the upside machine without the wildness, without the casino-like behavior. And what this did was bring more and more capital to the gold market because the big money, they're just not going to touch a casino. No matter what the potential gains are, they're not going to risk going into a casino. So the more orderly the price, the greater the money that comes in. The greater the money that comes in, the more orderly the upward move to the upside. But it never stops. It never stops the upside move. And this is where I think the misunderstanding comes from. The idea is that amongst the novices is that derivatives quell the price and cause it to go down. That's ridiculous. The derivatives help the price go up, but help it go up in a more orderly fashion. Now, tell me if this makes sense to you. Tell me if you're picking up what I'm laying down. A few of you let me know. Does this mean that manipulation doesn't happen at all? No, it doesn't. I am not saying that manipulation of the price of Bitcoin is non-existent. That's ridiculous. The manipulation of everything on planet Earth exists. What I am going to shock you with, some of you with, is this. Out of everything else on planet Earth, manipulation happens the least with Bitcoin. That includes silver, that includes gold, that includes stocks, that includes bonds, that includes everything else in your life. Everything in your life is manipulated to a certain degree. But I will promise you this, people, of every single item on this green earth on this green planet we call Earth, Bitcoin is manipulated the least. And you can hang your hat on that. Now, let me explain to you why. So Bitcoin's price can be influenced in the short term, but make no mistake about it. Sustained manipulation is extremely difficult, if not impossible. Now, here's the first thing I need you to understand. Bitcoin trades on hundreds, if not thousands, of independent exchanges globally. How do you manipulate something that is not centralized at one location, like all the stocks on the New York Stock Exchange, where a governing body determines when the stocks start trading at 9:30 Eastern time, when the stocks stop trading at 4 p.m. They control the circuit breakers where activity stops if the price goes up by X number percentage. As they stop the market behavior. That's a centralized, controlled exchange that is controlling all of the activity, the time it trades, who's allowed to trade it or whatever. That can be manipulated. But when you have an item that trades on hundreds of independent, if not thousands of independent exchanges globally, how do you control all of them? You don't. There is no single official price. So the price trading for Bitcoin spot on Binance is going to be different for the spot Bitcoin price traded on Coinbase, which is going to be different on Kraken, which is going to be different on all the other exchanges throughout the world. There is no centralized price, which means that you can't control a price. You can only try to control your price, but there's thousands of others that have their own price for Bitcoin. This makes it extremely difficult to control spot price if everyone has their own spot price. This structure limits manipulation very, very, very extremely. You guys got that? You got the first point? One of the main things that makes it difficult is that there is no centralized price like there is on the New York Stock Exchange. That's a centralized price for every stock. That prices are made globally over thousands of exchanges. It's a collective aggregate price that no individual firm or exchange controls. You got that, guys? Let me know before I move on to the really important shit. Yes? Let me know. Yes, no, a little bit, a tiny bit, a weensy bit. Okay, we get it, Oliver. But tell us how small amounts of manipulation can happen. And that's what I want to go into next. What you would call manipulation. I just call it normal market play, guys. But what you might call manipulation. All right, first and foremost, there's order book spoofing. Now, I used to be a huge order book spoofer before it was illegal on the NASDAQ stocks. I used to place hundreds of thousands of orders on the bid and hundreds of thousands of orders on the offer, the bid and the ask price, to create the illusion that I was either buying something big I'm willing to buy under the market big, or I'm willing to sell over the market big. And I would utilize this to accumulate. So let me give you an example of what spoofing might be. If I put 1,000,000 shares on the offer 50 cents above a stock, and I show the 1,000,000 shares, I show the world that I put 1,000,000 shares worth of sell orders 50 cents above a stock. Short-term oriented traders seeing that might start selling their inventory and hitting the bid, driving the price lower. Now, I would be secretly a secret bid under the market, just accumulating their sell orders. I'm using my visible 1,000,000 share sell order to cause panic selling out of the market, but I'm buying their selling. I'm using a fake, it's not really fake, I'm showing what I don't intend to do. 1,000,000 shares sell. I'm not willing to do that, but I'm showing it to cause panic sellers on the bid, driving the bid price lower right into my lower buy orders. So I will have buy orders under the market while I show sell orders above the market, causing a panic to the downside right into my buy orders. Now, this is called order book spoofing, for those of you who do not know the legal term. All right. It is illegal now. When I used to do it, it was not illegal. It became illegal because it was a true unfair advantage. So new order handling rules back in 1992 made it illegal what we were doing in the 1980s. This is still supposedly not so kosher in the Bitcoin space, but it has not yet been made legal. And I believe that what the US's crypto bill is attempting to do is to make those practices truly illegal. Now, again, large players place fake buy and sell walls. You've heard of the buy walls, the sell walls. These are usually all fake, because who really is going to show their orders like that? They're usually all fake and they intend to cancel those. The goal for spoofing is to create fear or confidence. It works both ways, to induce others to trade, and the spoofer profits from the reaction. Okay? Now, why it works? It works because humans and bots react to visible liquidity. And that will always be the same. Humans are very visual. You see a sell wall, humans start getting scared. You see a buy wall, humans start getting greedy. All right. Now, thin books amplify this effect. So a lot of the spoofing happens on the weekends when there's thin activity, thin books where you can muscle the price around a little bit. Now, why this is never long term, why this actually, if you do it long enough, you will get killed. This is a failed technique if done too long. First of all, it costs. There's a cost to the capital to do this. It's easily detected. And the arbitrage bots that get a hold of this, they start erasing the distortion. So this is sort of what killed it in the equity markets too. The neural networks and the bots that started to detect false walls would kill them by rushing the market as quickly as they could to those walls before they could cancel. So this would become devastating to the wall builders using this spoofing technique. It does not work long term. It is not something to fear. It's bullshit. It can cause a minor effect short term, but if you're in Bitcoin for short term, you don't understand what you're doing. So this is a non-event for true Bitcoiners who are not thinking about the really short term, the day to week thing. Number two, how can prices be manipulated? Liquidation cascades. Now, this is the most common form. Exchanges gunning for their own customers' liquidation points. Binance is one of the largest, they're one of the largest culprits when it comes to gunning for their own customers' liquidations. I would say Hyperliquid is probably number two now, and they've rushed to number two. They weren't always number two, but they've rushed to the number two spot. Binance is by far the number one culprit behind wiping out their own customers. Now, this is not price setting, it's leverage flushing. Now, let me explain to you. This is how the mechanism works. The exchange pushes price just enough to trigger forced liquidation. So a lot of these greedy traders are on 10 times leverage, 20 times leverage, 50 times leverage, 100 times leverage. It's stupid. This is now turning a market into a casino. One could argue that the casino players should be flushed out. That is fair for them. At any rate, exchanges will often push price just enough to trigger forced liquidations. They know where your liquidation points are. And if a cluster of liquidation points are in the same area, that's a real gold mine for them. Now, liquidations, they create market sells. That selling pushes price lower and a chain reaction flows. So you might have 5 different liquidation levels, one under each of them. But if you trigger the first, it's like a domino effect. The first one drops, that further drops the market to the second liquidation one that adds momentum, that further drops the market to the third liquidation pool, price range or whatever. And you can create this cascading 8 domino effect where the exchange and other market players who understand this effect will sit there with buy orders after the 8th domino has fallen. This is why Bitcoin often wicks very often. You see tails at the end of sharp moves up and down because that's the liquidation cascading effect. It reverses quickly because those who understand the game start buying at the end of what they consider to be that liquidation cascading domino effect fall. And those who understand it do it, and those who initiate it, like the exchanges, do it, causing a quick reversal to the upside, leaving behind tails in the wake. This mostly affects perpetual futures, perps, but the selling pressure always bleeds into spot. So it's not that these people are being liquidated on the spot market. They're being liquidated in the perps market, but that liquidation often does spill over into the spot market. Now, I hope this is all understood. I hope this is not too technical for you. I try to keep my talks basic so that the technicality of financial markets doesn't go over the heads of most people, but this is just one of those topics where I'm not sure that I can prevent that. What's the third? I talked to you about spoofing, number 1. I talked to you about the most common cascading liquidations on the futures market on the perps. Number 3, how can it be manipulated a little bit? Whale market selling. Temporary impact. Whales were your original OGs of moving thin markets. Bitcoin was always thin for many years, and they could truly have this huge manipulative effect on the market price. Those who controlled hundreds of thousands of Bitcoin. So a large holder sells aggressively on a single exchange, let's say a big OG with thousands of Bitcoin. They start selling aggressively on a single exchange. This is how it works. Local price drops. Now, this does not drop the price on every exchange. Remember, Bitcoin is not a singular price that is centralized on one exchange. Every exchange has its own local price for Bitcoin. A lot of people don't understand this, that it's an aggregate price. It's not a centralized price like the price of Apple. Like Apple's not traded all over the world. It's traded from one central location. So there's always only one price. Bitcoin is traded from thousands of locations, and it's an aggregate price that you see when you pull up your chart. It is not a single price. Bitcoin Whale will do is sell a lot of Bitcoin at a local exchange, creating a change in one of the thousands of prices out there. So local price drops. But this can often lead aggregated indexes to follow shortly after. If an OG crushes the price on one exchange is out of sync with the rest of the exchange's prices. But a lot of times that one disparity will cause some of the traders on the other exchanges to sell as well, bringing the aggregate price to that one, especially if it was a big enough sell. Why this doesn't last, guys? Because of arbitrators. I always buy those dips. I know when the dip is false. I know when it's short term. I can feel it. I can see it in the market. I can see when it's just one of these scenarios that's a blip on the screen and I buy it. So arbitrators who understand the mechanics behind this, they will always buy that because it's usually over short term resolved and you revert right back to the mean before that temporary one OG dump. So capital starts to flow from the other venues. Price eventually re-anchors within minutes to hours after something like this. It is so short term, it is so temporary, but the effect is rippling amongst the ignorant. The effect ripples amongst the ignorant retail. The retail does not understand these mechanics. That's the third. So remember these things. Now you should be writing these things down. So the first thing I told you was order book spoofing. The second thing I told you was, which is the most common, liquidation cascades in the perps market, which does spill over into spot. The third was what I just explained. A whale sells in one local market, detaching that price from the rest of the aggregate prices, which cause others to potentially short-term sell in the other markets, bringing the aggregate price temporarily closer to that one ostracized price. And then it quickly gets reversed, okay? Then you have number 4, funding rate and sentiment games, the funding rate. Now, this I think is somewhat familiar. I think many Bitcoiners are familiar now with the funding rate thing. So for instance, last I looked, the funding rate flipped positive, which means that when a funding rate flips positive, the longs have to pay the shorts. The longs have to pay shorts to go long. Let me try to explain this as basically as I can. When you have a positive funding rate environment where longs have to pay shorts, it signifies that the buyers have to buy above the short seller's price to get long. So there is a funding rate that gets paid to the shorts and they earn sort of like a yield on their short position. So in that environment, let's say you have a positive funding rate of 0.01, which was the last time I checked. That's kind of neutral, but still it's positive by a small amount, but it's still relatively neutral. That's not any significant positive funding rate. But let's just say, for simplicity's sake, it's 0.01%, which is the last time I checked a couple days ago, was positive funding rate. And once that flipped positive, you start to see the market stabilize and start to move up, actually. But anyway, so 0.01 positive funding rate means longs are paying short sellers every 8 hours. Now, listen to me carefully. This funding rate is paid 0.01% of the position is paid every 8 hours to a short seller. So they get paid 3 times a day. So they get paid if it's 0.01% every 8 hours, they get paid 0.03% per day, which annualized is about 11% a year. And that's at a very, very mild 0.01% positive funding rate. When it's a negative funding rate, it's just the reverse. Short sellers are paying longs to go short. Now, there's an arbitrage opportunity in this. Large players can lean on derivatives to flip funding deeply negative or positive. This forces positioning imbalances. Then they unwind into the reaction. Now, I don't want to go into all the specifics here. This is kind of more for my internal Bitcoiners where, I educate on that level. But I just want you to understand that there is this force in the market called the funding rate and sentiment force, or game, if you will. And very sophisticated Bitcoiners watch the funding rate. It reveals quite a lot. When you understand these dynamics, you can tell what's fake and short term and take advantage of it, and what's real and probably more lasting, and you position for that. So this is kind of like psychological manipulation. This is not structural control, guys. But For those of you who are interested, do more research on the funding rate and sentiment game in Bitcoin. Use that term, funding rate and sentiment game. Plug that in, and you'll get a world of information on that regarding Bitcoin and how it plays into short-term price movements. A lot of people say, Oliver, why are you never fearful buying into these collapses? Because I understand these dynamics. All right, item number 5. So 4 was the funding rate. Item number 5 is thin liquidity timing. I think we kind of touched on this, where manipulation is easier during weekends, holidays, low volume hours. Now, someone recently told me, said, Oliver, I just noticed that everyone's always selling off Bitcoin starting at 9 a.m. Eastern time when the U.S. markets open. And yes, of course, when thin market activity has falsified a move to the upside in the Bitcoin spot market, they sell when the liquidity faucet opens when New York opens at 9 a.m. This is very typical. Now, don't think that this is strange, guys. This happens in every market. And as I mentioned to you at the top of my talk, it happens the least in Bitcoin. I've lived with these dynamics my whole career. And yes, I'm going to remind you once again, just in case I forget, I've been doing this for 40 years. So the weekends, the holidays, any period where there's low volume activity, you doubt what happens in that low volatility environment. Doubt it. You won't be right 100% of the time, but you will be right the vast majority of the time, doubting whatever happens during weekends, holidays, low volume hours. Now, this is why kind of dramatic wicks often occur when TradFi is asleep. Hamza is asking, at what time horizon do these manipulation tactics simply stop mattering? They stop mattering over months. So if you're trading on a day-by-day, week-by-week basis, you could be caught with these things. If you just stretch your time frame out over a 4-month time frame, none of what I just mentioned to you matters. Zero. You eliminate all of it. These are short-term things. Do you understand? And they are things that are more effective on every other asset. It is the least effective on Bitcoin. It's just that it doesn't seem like that because Bitcoin is still sort of like a 60 vol asset. So the extra volatility makes it seem like it's more effective on Bitcoin, but it's really not. It's the least effective on Bitcoin because you can't control a centralized price. Now, if you look at, guys, I encourage you to just check out the daily liquidations. You can download an app or even go on the website and download an app called CoinGlass, coinglass.com. And on coinglass.com, go to just 24-hour liquidations. And I check that kind of periodically just for fun. And you see the hundreds of millions of dollars every single day being wiped out by these tactics I just explained to you. Hundreds of millions. Now, I want you to think about this. Money is not lost into the ether, people. It's not like when a person loses $8 million on a single trade, that it just disappeared into the ether. The $8 million was won by someone. Oh, yes, someone lost it, but who won it? Who got it? And I want you to see the hundreds of millions of dollars every single day that someone is losing and someone is also winning. It's a big game. But don't be afraid of this game. This is the very game that over time adds rocket fuel to the asset. Never be afraid of this. This is what you want. And Bitcoin is infiltrating itself into every pocket of society, every corner of the TradFi world. It is saying, oh, you want me to put on this costume? I'm going to put on this costume and go over there. I'm going to put on this costume and go over there. I'm going to pretend like I'm digital credit here. I'm going to pretend like I'm a bond here. I'm going to pretend like I'm a futures contract here. I'm going to pretend like I'm an options contract here. I'm going to pretend like that. And it is infiltrating like the freaking virus that it is into every freaking corner of the financial society. This is how it takes over. Can't take over from the outside. It has to take over from the inside. Hamza continues, and why do people keep applying short-term tools to long-term assets like Bitcoin? Because they're ignorant. And this is to our benefit. This is what makes a market. I need short-term players to sell to me when I want to buy. If I didn't have them, how could I buy? I need panickers. I need people who don't understand the asset to give it up to me. You need this ignorance. If everyone understood Bitcoin, it would be $10 million. And here's the strange thing. Many of you guys, right, are wishing for Bitcoin to skyrocket to the upside. And I had my views of $300,000 Bitcoin. I was fucking wrong too. But I'm different. I'm glad I was wrong. But I was wrong. I admit it. Nobody was right, but I admit it. I make no apologies about that. I thought we would be outpriced around 300 by now, 280. But we weren't. Thank God I wasn't right. Because not a single person listening to me now has enough Bitcoin. You don't have your sufficient amount, but you want it to outprice your sufficient amount? That doesn't even make sense to me. Oliver, I really want more Bitcoin, but I also want to see it 500,000. How does that make sense? Guys, I will tell you that I started accumulating Bitcoin under $5,000. My lowest entry price was 3,800, and I was accumulating like a freaking madman. Do you understand? And my goal was to get to a certain price before it broke 10,000, but Bitcoin ran too fast. It went past 10,000 faster than I could accumulate my goal that I wanted under 10,000. But if I got it, I'd be well past the $1 billion mark in terms of value today. It just didn't stay under 10,000 long enough for me to get it. Now, 100,000 is the new 10,000. And you guys who don't have enough Bitcoin for generational wealth yet, you still want it to leave you behind. That doesn't make sense to me. You should be happy it hasn't. You should be happy that my price targets failed, that everybody's price targets failed. This is not a flaw. This is Bitcoin's feature. This is Bitcoin being benevolent to us, giving us an opportunity, giving us a chance. I don't care what these other bozos on X say, calling that Bitcoin's failure. We've heard that shit over and over before. We know that's bullshit. Be happy that you are able in late 2025 to still accumulate Bitcoin under 100,000. It's the new 10,000. And your future self will thank you for it. Why lately is every pump getting retraced almost instantly? Thanks for the space. Largely with the tactics that I've explained to you right now. Now, there was a huge options expiration that took place last Friday, where the Delta Neutral strategy had Bitcoin sort of penned at around 88,000. And I think it's still there now, right? If I'm not mistaken. Well, I guess the Delta Neutral had it sort of penned, anything greatly above 90,000 would have the options in trouble, the options market makers in trouble, and anything greatly below 86 would have the options market makers in trouble. So I would always buy in the 86s during this period. It would dip into the 80s. I buy 86 and under, knowing that it has to rip back to slightly above 90, only to be brought back down to 80. And I just kept accumulating under 86 and under, 86 and under, 86 and under, because I knew where the Delta Neutral strategy was with the options players. So they couldn't have it move so much beyond up or down. You understand? So a lot of those strategies had a temporary quell on the price. But guys, just understand that every side gets their turn. These things sometimes short-term have negative pressure on the price, but there's also the other side of the coin. These things also sometimes have positive momentum to the price. Everybody gets their turn. If you know what you have, you use the negatives to accumulate more and the positives to gloat. You don't use the positives to sell, because if you sell, you just don't know what you have. Just don't be afraid of the noise. Understand that all this noise is only a short-term effect. It's impossible for the effect to be long-term for the reasons I explained. And go over this talk again, especially the beginning, where I'm explaining why you can't do this long-term. You can't. It's impossible. And why it's always less on Bitcoin than any other asset that's ever been known to mankind, because every other asset is controlled, manipulated, pushed around, and regulated by humans. Bitcoin can't be regulated by humans. How? The other thing I will say is this. Let's put things in perspective. For those of you who self-custody their Bitcoin, and if you don't, you're not a Bitcoiner. People who have Bitcoin on exchange, they're not Bitcoiners. Or people who have spot Bitcoin ETF, they're not Bitcoiners. Bitcoiners are those who truly are self-sovereign and own their own Bitcoin. They control their own Bitcoin through their own keys. Can anyone manipulate your cold storage Bitcoin? The answer is no. This is not the case for any asset on planet Earth. The closest one would be gold. But so if you own gold in your basement, no one can control that gold except you. But at a certain point, holding a certain amount of gold in your basement becomes dangerous. Because if you get drunk at a bar one night and start bragging about the gold in your basement, it won't be there for very long. You can only do that up to a point that you will never be able to leave your home with a certain amount of gold in your body. You will become a prisoner. You couldn't even go out to dinner with your family unless you hired armed guards at a certain amount. No one's leaving $2 billion in Bitcoin in their basement and going on a 2-week vacation. Nobody's doing that. So the problem with gold is that it must be custodied. It must be protected with guards. It must be given to another man to trust. And we've always known that other men with great value that have possession of your asset regard it as theirs. At a certain point, whoever you hand your gold to considers the gold theirs. This is where this term comes from. Possession is 9/10 of the law. This is the case all over the world. Whoever has possession of your asset is the owner of your asset. Possession, look it up. Go type that into Google if you want. Possession is 9/10 of the law. The law favors the person who has it in custody. It does not favor the owner. Laws don't favor the owner. Laws favor the custodian. Possession is 9/10 of the law, not ownership is 9/10 of the law. This is why you must own your Bitcoin. This is why you must not custody it on Coinbase. This is why you must not be just in the spot Bitcoin ETFs. Own something, for Christ's sakes. Be responsible. Man up, woman up, and own it. But Oliver, what if I lose the keys? Bullshit. What if you lose your house keys? Be freaking responsible. What if you go to a bar and leave your Ferrari keys on the counter? The same fucking risk. Stop being a fucking baby and self-custody your shit. It's the first time in human history that we are truly able to own our own shit, and you're crying about it. I'm scared, Oliver, I'm scared. Well, find some way to gain some responsibility and own it. Martin Armstrong himself predicts that the EU will ban Bitcoin by 2030. No, they won't be able to do that. Well, first of all, Bitcoin can't be banned. So I want you to think about it. Think about it from this. Let's go back to first principles. You have Bitcoin in cold storage. You control the key. You have your seed phrase for Bitcoin. Who can ban your Bitcoin? How can your seed phrase be banned? How can you ban a word? Because your seed phrase is your word, right? So for the first time, your word is your bond. Your word is your value. This is how the world should work, that my word is my value. So for the first time, your word is not just a cliche. Your word is your worth. Your word is your value. Now, how can someone ban a word? From this day forward, I will ban all 12 words that represent this person's Bitcoin. From this day forward, no individual in our country will ever use these words ever again because they represent two Magic Trading's Bitcoin. Bitcoin can't be banned. That's its invincibility. It can't be touched. It can't be confiscated. It can't be stolen. It can't be debased. It can't be hacked. Despite the quantum FUD you've heard, bullshit. You can't ban words. You can't ban code. You can't ban math. You can't ban mathematics. How do you ban mathematics? I don't want anyone from this day forward in this country to use the numbers 0 through 9. But that's what Bitcoin is. It's code. It's numbers. It's words. You can't physically grasp it. People say, well, Oliver, if I can't touch it, I don't believe in it. That's stupid. How are you this stupid in 2025? You haven't touched a physical photo in how many years, if ever, in your life? When's the last time you've held a physical movie, a VHS movie in your hands, bro? It's not physical, therefore you don't trust it? Come on, bro. We're in 2025. You can't touch love. You can't touch hope. You can't touch peace, but you will die for these things. Your God can't be touched. Your God can't be held. Your God can't be seen. Your pictures, your movies, your music has disappeared. Your mail, you no longer lick the back of disgusting envelopes to mail your bills in or anything like that. Your mail has disappeared. Your relationships aren't even physical today. I guarantee that the vast majority of you have more digital relationships than you do people that you can touch and feel in your life today. And some of them are probably more special than the ones you can touch and see. Let's get beyond these novice narratives, people. And we're in 2026 now. It's stupid. It's low IQ stuff. I can't touch it, so I don't trust it. Yet you live in your ethereal world of thoughts every second of the day. Your fears control your life, which can't be touched, seen. Your hopes and desires drive your every action, yet you can't touch them or see them. These things are more sublime and important than the things you can touch and feel today. Show me where love lives. I want you to put it in my hands. So I want to feel it and grasp it and wrap my hands around love. Show me where it is. You can show me the manifestation of it, but you can't show me what it is. We value the things that can't be touched or seen more than the things that we touch and see. We will die for the things that we can't touch or see. Hope, love, true friendship, peace, joy, honesty, fairness, justice, Bitcoin. This is the message that the world needs to hear before they're too late. People ask me all the time, Oliver, why do you spend your time shouting from the rooftops? As cliche as it sounds, is because I care. No, Oliver, you're trying to pump your bags. What? You think your $50 move into Bitcoin is pumping my bags, dude? No. I am just, what kind of human being would you be if you were in a burning building, in a room in a burning building, and you're amongst 5 other people, there's 6 of you, 5 other people who are in this burning room, but they're the ones asleep and do not understand that the room is on fire. And you have spotted the exit sign. Now, hear me carefully, Bitcoiners, people. There's 6 of you. You have awakened, the other 5 have not, and the room is on fire. And if you do not get through the exit sign fast, you will burn alive. But your other 5 colleagues are asleep. So what do? Do you dash for the exit and say, fuck them? Or do you have some attempt to say, get the fuck up, get up, wake up, the room is on fire, there's the exit sign, let's go, get up, get up, get up, get up, come on, let's go, we only got a certain amount of time, let's go. Which human being do you want to be? The one who says, fuck them, and you run for the exit? Or you at least have some attempt, wake up, let's go. I'm the one who's willing to try to wake you up first before I dash for the exit sign. Not very long, by the way, because I'm not going to sacrifice my life because your lazy ass won't wake up and figure out what's happening. But I will try for a brief period before I dash for the freaking exit sign. I would be a terrible human being if I said, fuck you. I'm going for the exit. I'm not going to say shit. So I get on this microphone to try to say, wake the fuck up. And some of you say, but Oliver, what about my sneakers? Fuck the sneakers. Let's get through the deadline. But Oliver, my lucky t-shirt. I don't have my lucky t-shirt on. This is not my lucky t-shirt. Let me run for my lucky t-shirt. What about my lucky t-shirt? What about my sneakers? What about my fancy stocks? Fuck all of that. Fuck your stocks. Fuck your altcoins. Fuck everything. Let's go. Leave your socks behind. Leave your shoes behind. Leave your bonds. Leave your stocks. Let's go. This is the exit, bro. But Oliver. And that's all I get. But Oliver this. But Oliver that. You guys crack me up, and it's funny. This is where we're at, people. This is where we're at. So this is what I will say in closing to you. Don't let anyone cause you to get all upset about this false manipulation narrative. This is BS, or that futures are bad for Bitcoin and options are bad. And oh my God, the institutions have taken over Bitcoin. It's not the same. This is bullshit. Bitcoin is infiltrating everything. If you have this notion that Bitcoin is not for bankers, that Bitcoin is not for the institutions and the BlackRocks of the world, you don't understand what Bitcoin is. It's fucking going to take over everything. It is not just for the people that you like. That's the system that we've escaping from. So you're playing the same corrupt system by saying Bitcoin is not for you. Bitcoin is not for you. It's just for me. That's the system we're escaping. You have no right to say Bitcoin is not for the institutions. It's not for the BlackRocks. It's not for the banks. It's for freaking every entity on earth. It's from every human being, as well as every AI bot, every AI robot, every AI system on planet Earth. It's for everything. And so you had better get used to Bitcoin becoming a part of everyone's system. You better get used to it. Spaces still has to get their act together. I know there's a lot more comments from you that I can't see, but it just is what it is. I've always dealt with this here. Anyway, did you guys miss my spaces? Did you miss me? Let me know, goddammit. Did you miss me? I know some of you didn't miss me. They're like, keep this dude away, bro. Keep him away. I don't know how to handle this dude. Keep him away. I know. All right. Thanks, Leah One. I appreciate it. All right, guys, listen. Enjoy the rest of your day. Enjoy your holiday. Bring in the new year safely with loved ones, family. Be safe. Be good. ABA, always be adding to Bitcoin. Remember, it's the ultimate savings technology. Ignore price. Ignore FUD narratives. We did not get the year that we thought, but look at that as a benevolent act by Bitcoin, not a failure. Look at it as a feature, not a flaw. It's giving us time. It's giving us, in addition to itself being the scarcest asset on earth, it is giving us time which is the ultimate scarcest asset on earth. More time to get more free. With each additional amount of Bitcoin you acquire, you have acquired more freedom for yourself in the future. And time in that regard becomes extraordinarily valuable. Time to get as much as possible. Now, you have to understand what you have to get to that point of conviction. But I strongly encourage that if you're not there yet, that you hit the books, that you get there. Because this is a once-in-a-lifetime opportunity, even from here. I love you guys to death, whether you know it or not. And I hope to be doing these things a little bit more frequently, okay? All right, guys. Ciao for now. Boom.